Hi, Mathis Connie here with Connie Management Group, and this week we're going to take a break from our usual format. Now, our usual formats usually starts with a date and saying that this week we're going to look at the best so-and-so stock to buy right now. Just to change things up and to provide a little bit more broader general education, we're going to read to you a recent blog post we put together, and we think it should be pretty helpful, and we'll try this format out and we'll see how it goes. The title of this post is Want to Beat Wall Street? Well, first you need to know who is Wall Street, and we'll just go into it right now. You know, when I graduated from the University of Chicago with my MBA in the early 90s, I had a decent feel for what most of my classmates were pursuing as careers. Many worked in consulting, many worked for large corporates, and many worked on Wall Street. Interestingly enough, while the consulting and corporate jobs seemed pretty straightforward, it took me years to really understand what the Wall Street jobs were and how they related to each other in the big scheme of things. I guess you just chalk it up to experience. Even to this day, many of my classmates really don't know what my job entails as a project finance banker. And, you know, it's lending for very large worldwide infrastructure projects that take years to complete and almost never cost less than $100 million. It's just like when buying a house, the owner puts up 20%, and the bank, and at this scale, banks put up the 80%. Yeah, it was complicated. You know, the total documentation for a single deal on average probably stacked 2 to 3 feet high, but it was a lot of fun too. Right now, I'm in Act 2 of my career, investment management, specifically stock investing. A long-time hobby of mine that I always took quite seriously. As time passed and the more deals I became exposed to, the more fascinated I became with the opportunities stock investing offered. While there are plenty of areas to put capital to work, I don't know of any other investment opportunity that could readily match your personal risk appetite. You know, want to invest in a stalwart, day-in, day-out, low-risk dividend-paying company? Done. Want to invest in a high-flying biotech unknown company with a Vegas-style payoff? Done. Additionally, the stock market gives an individual incomparable liquidity. Generally, someone is always there to take you out of a position. If you ever tried selling real estate, you know you can wait for months, if not longer, to find someone to pay you fair market value for investment property. My focus is now investing others' money for gain and to become an inspiration to a ton of uninspired investors. I found that many people believe that the markets are rigged, that their investment options are limited, and that their retirement accounts are only a bit better than savings accounts. Well, based on my experience, the markets are not rigged, at least not significantly. You just need to know who to listen to on Wall Street. While understanding the basics of investing, which you can find out with many a nice primer at Amazon.com, after you do all that, just who do you listen to and not listen to for general advice? Well, all of self-education is a waste if you get swayed and worried as soon as you read or hear news about the latest financial pending catastrophe that more times than not is about driving advertising revenue to a particular media property. People need context regarding who to listen to, and they need to remember that first and foremost, Wall Street is about selling. Pardon my Star Trek geek reference here, but as far as Wall Street is concerned, they are the Herodian, and you are the starry-eyed prey. In non-geek parlance, at game time, if you don't know who the sucker is at the poker table, it's you. While I'm pursuing the conventional avenues of growth for a new investment management firm, approaching individuals, hedge funds, and other funds for allocation, I'm a big believer in establishing an online presence to both share and learn. The connection between the internet and the democratization of power is obvious, and it's foolish to ignore it. I am not a writer. I'm a veteran deal guy that has at times laughed out loud at counter proposals at the big conference table. Knowledge and information is power. Opportunity is available for those with the assertiveness to make that knowledge and information work for them on any level. I'm a strong believer in capitalism. I'm a strong believer in self-determination. I'm a financial insider. I know what moves capital. I am here to build a valued business. I'm also here to share the red pills for those that want them. Why am I so confident about my ability to make a difference? Mostly due to the sheer volume of mediocrity I've witnessed in my career and the past success of Wall Street to dupe the common man into submission, unfortunately. There are, without a doubt, many talented people on Wall Street, but by and large, they are a minority. Many times than not, their brilliance is really attributed to the best lawyers and accountants that money can buy. After all, everyone by definition cannot be above average. I figure I can help you identify the above average types. And by the way, here's a tip. Throughout my engineering and business school education and career experience, the smoothest talking, most confident person you talk to is never the best. He or she may be above average, but trust me, never the best. I found the best knows that staying on top is a competitive, never-ending game, and it tends to keep them humble. The best, usually when pressed, can always rattle off details of some esoteric reported journal when necessary to support their point of view. So stocks. Yes, I do believe they are the way to go, despite the trend of fewer people now investing in individual stocks versus 20 years ago. In addition to the reasons I've already mentioned, I'd say just look at the evidence. Who has been the biggest business moguls over the past few years, even including the tech wonder kids, and even Gates started as a kid? They have been stock investment managers. There's Buffett, there's Templeton, there's Lynch, and a ton of other hedge fund managers. And they were not real estate tycoons, although more than a few of them have respectfully held their own. And now, with information and data widely available to the masses at free or very affordable rates, active stock investing is an overlooked activity that is due for a resurgence. My now ready understanding of how Wall Street works gives me a calmness because I understand the playing field. I understand perspectives, strengths, weaknesses, and motivations of the different players. To someone who doesn't know, and someone who works on Wall Street says so-and-so, it can be intimidating. After all, they must be on the inside, right? Well, you have to keep in mind, Wall Street is a sales machine first and a value-added provider second. Its role truly is critical to the worldwide economy. When it comes to getting ahead, there truly are opportunities out there every day. You just have to be proactive about pursuing them and not just follow the hottest tip from the latest guru. And for the record, yes, Wall Street has gurus, but the truth of the matter is they are extremely few in number. The majority simply gain their expertise through experience like most people do in their careers. This is also why I'm such a big proponent of Peter Lynch's and others' general philosophy of simply investing in what you know. Your exposure to a particular industry for just, say, 10 years can give you just as much insight into industry trends as anyone on Wall Street. In sports, when you're getting ready for the competition, you look at the field. You quickly run through, what is a factor to pay attention to, what is a factor to dismiss. You and your investment dollars are no different. The funny thing is, when you do a Google search on, how Wall Street works, you'll find no playbooks out there telling you these are the field positions on Wall Street. You'll find no playbooks telling you this is what these people do well and these are their motivations. Think about it. If you don't know these few things, then it is very difficult to know when and who to listen to. So I'm going to lay it out for you. No doubt I'll leave out some group, but I'm sure I'll catch most of them. So someone tells you about an investment opportunity and he or she is quote-unquote connected. Unless you understand the context of the conversation and the role of the connected person, then you're making emotional judgments, not sound logical ones. Okay, so here are the players that are known as Wall Street. One thing to keep in mind is that the largest financial firms, like say Chase, Bank of America, Goldman Sachs, etc., have most of these players listed in different departments. But let's start off. There are 7 different groups that I'll be describing, and I'll get through them quickly. But the first is, number 1, the financial advisors. These are the folks who you'll most likely encounter in daily life. The role of the financial advisor is twofold. Number 1, to sell you resources for financial planning and protection. And 2, to direct you to other professionals that specialize in investing your money. They can find you quality investment managers, but without going into details, not necessarily the best. If you know one, he or she can tell you how their hands are somewhat tied to their contractual ties to what's called a platform within the industry. Their strength is they are especially resourced for finding niche specialists to address your personal situation. The next group I've listed are the bankers and lenders. Bankers are lending specialists to different parts of the economy. Bankers are usually in tune with general economic trends, and for their industry of specialty, they are especially resourceful about industry challenges and trends. In addition to those bankers serving the needs of small and medium-sized businesses, their role is usually critical for making the numbers work for those multi-billion-dollar transactions you hear about. Next, we have the brokerage firms. These firms are best thought of as middlemen, transaction facilitators. They make securities transactions happen. Think E-Trade, Charles Schwab, TD Ameritrade. Their strengths: they're exposed to market trends and see general market sentiment firsthand. You really have to take their recommendations and research from brokerage firms with measured consideration. I mean, their livelihood depends on creating transactions from which they receive a commission, not providing you the best research. Additionally, be very, very careful of the brokerage firms that sell penny stocks. I mean, better yet, I personally say just avoid them. I personally think you're better off going to Vegas than investing in penny stocks. And if you keep reading this blog or listening to this blog, I'll show you how to make just as big if you want and much safer bets by buying options on mainstream blue chip stocks. The next group, the fourth one, are the professional traders. Traders also facilitate transactions. You can also think of them as middlemen as well. However, since they're usually providing these services to corporate clients, they are also in positions at times to create substantial marginal income for their employees. I mean, you could think of them as wholesale dealers. They don't deal with retail clients. In my opinion, the commodity trader's role is first or second of importance to the economy among the Wall Street players. I mean, traders allow corporations to buy all kinds of commodities in bulk at fixed prices, and that in turn allows a lot of companies to keep their retail prices steady. And those products range from paper to orange juice to gasoline. Next on the list are the investment bankers. These guys receive a lot of attention as the players on Wall Street. These are the folks that help companies raise money for expansions and acquisitions. You hear about IPOs or companies going to Wall Street to raise money to acquire other companies. Well, these are the investment bankers that help make this happen. Now, their analysis skills are above average. They are required to be high-quality salesmen with deep knowledge of both finance and accounting. And you have to be, the caution regarding investment bankers is that their required sales role doesn't necessarily make them the most reliable source of information. Remember, selling is their first priority. Also of note, in all fairness, the smartest guys I know who worked on Wall Street, they work on Wall Street, they work in investment banking or research. And that leads us to the next group, and that's the researchers. So far, among the players we talked about the financial advisors, talked about the bankers, the brokerage firms, that's 3. The next one was the professional traders, the investment bankers, and now we're on to the 6th one, the researchers. As I mentioned, some of the smartest guys I know who work on Wall Street have been the researchers or the investment bankers. The researchers need to have a very deep level of understanding accounting, economics, and finance, at the same time be capable of summarizing the impact of all those details quickly and succinctly. Among other things, they perform various kinds of evaluations determining an acquisition price, a sales price, or a future stock price. If you get a chance to talk to or receive the services of a trustworthy researcher for a particular industry, cherish it. While no one is right all the time, they tend to have the best batting average as a group when it comes to advice. Unfortunately, the problem with researchers is trusting their advice when they work for the department of a large financial institution. Financial institutions with, say, investment banking groups, they regularly earn multi-million-dollar commissions in exchange for raising capital for other firms. Consequently, the organization is not going to allow its research department to say anything overly negative or bad about a high commission paying client. I mean, think about it, it's just common sense. Yeah, they're supposed to be independent, but I mean, trust me, they really aren't. It's just human nature. If you don't have access to any researchers, I suggest following my lead here, and that's just by going to getting a subscription to ValueLine, an independent research company. Just go to valueline.com. They offer multiple subscription levels depending on what you're looking for, and they don't have the conflicts of interest. And additionally, there are others out there, but ValueLine is the best in my opinion. And additionally, Warren Buffett and Peter Lynch have publicly endorsed ValueLine in case my opinion is not enough. And the last group that's considered to be Wall Street are the investment management firms. These are the private equity funds, the hedge funds, the mutual funds, the money managers. Private equity funds are the guys that invest money directly into small companies before they go public. Their success and ability is driven by their sector expertise and their access to deal flow. I mean, opportunities are usually first shared among the short list of firms that know each other. The hedge funds are supposed to be run by the gurus of Wall Street. I mean, these guys earn the highest fees among the investment management firm types, but unfortunately, there are more and more cases that they're not quite living up to the expectations, especially for the fees that they charge. These guys, they invest in public and private companies, commodities, derivatives, real estate, I mean, the entire gamut, all in the hope of attaining the best returns possible. The mutual funds, almost everybody knows what that is. Those are the most commonly understood financial product, usually consisting of stocks and or bonds. Our biggest beef with mutual funds is that the average number of stocks they invest in is around 150. And, I wonder just how do you expect to beat the market when you diversify so much? And you're basically representing the market with 150 or more stock selections. Furthermore, why don't you just try and go to one of their websites or look at their reports to find out just what these 150 plus stock holdings are. In my experience, it has never been easy. It's just never been easy. And, I wonder why. If this is, and also, if this is the average level of to diversify is across 150 names, then I really think you're better off just investing in a passive index fund that will charge you a lot less annually. And also within these group of investment management firms are the money managers, and that's the catch-all for the remaining active investment managers, and they usually take a more personalized approach to serving their clients, and their scope of investment may be narrow, say just stocks only, like Connor Management Group, or they may be wide and broad, like a hedge fund manager. So we've gone through the 7 different players explaining who Wall Street are. There are the financial advisors, the bankers, the brokerage firms, the traders, the investment bankers, the researchers, and the investment management firms. So now you know who is Wall Street. You now know a bit about the leading players. So the next time you hear about a hot stock tip or a fast-talking Jim Cramer segment, you can stop and listen. But now listen to it with context and think about being a competitor out on the playing field. Think 1, what player is doing the talking? 2, how deep is his knowledge? And 3, what is his motivation? So, what I tried to explain here is that different players do different things well. But first and foremost, remember, their common job function is to sell. So you want to beat Wall Street? Well, you can, and we can help. Just do some homework, use your knowledge, use your instincts. Become the Herodian and be not the prey. Enough said. I'm Mathis Connor with Connor Management Group. We hope you found this helpful, and we'll talk to you again soon. Take care.